Okay, let's talk about November 20th, 2025. Because on that day, the stock market did something, well, something that just made no sense at all. It took off like a rocket on some of the best news you could imagine, and then, in just a few hours, it completely fell apart. In this explainer, we're going to put the pieces together and figure out what was really going on. So, the morning kicks off with an absolute bang. Nvidia, the undisputed king of the AI boom, comes out with earnings that just blew the doors off even the wildest expectations. Their CEO literally says sales are off the charts. I mean, this is the kind of news that's supposed to be rocket fuel for the entire market. And yet, this happened. By the end of the day, the tech-focused Nasdaq wasn't up, it was down. A lot. A stunning 2.2% drop. A total reversal. So, what gives? How on earth do you get from off-the-charts good news for the most important company in the market to one of the biggest sell-offs we've seen in weeks? What just happened here? That is the mystery we're unpacking. This whole thing boils down to a massive paradox, a single day where two completely opposite economic realities just slammed right into each other. And look, the scale of this reversal was just breathtaking. The S&P 500 was cruising towards its best day in months, only to finish deep in the red. The Dow? Poof! A 700-point gain, completely gone. It was a massive U-turn that left a lot of people scratching their heads. All right, so to really get what's going on, we have to split this day into two completely different stories. First, let's look at the good side. All the genuinely fantastic news that was powering that incredible morning rally. The rocket fuel for all this optimism was, no surprise, Nvidia. I mean, they didn't just meet expectations, they completely shattered them. Their guidance for the future was glowing. The stock, naturally, shot up almost 5%. And it was pulling the entire market right along with it. It was the absolute peak of AI euphoria. But then, the whole thing just evaporated. After that huge jump, Nvidia's stock completely flipped and closed the day down over 3%. Now, think about that. When the best news you could possibly imagine can't even keep a stock afloat, that is a massive red flag that something else, something bigger is going on under the surface. And here's the thing. This wasn't just some isolated tech bubble story. On the very same day, you have Walmart, a bellwether for the entire U.S. economy, posting amazing earnings. Their stock jumps 6.5%. But the really big deal? They announced they're moving their stock to the Nasdaq, basically saying, hey, we're a tech company now. That is a huge vote of confidence. And if that wasn't enough, we also get a massive $25 billion merger announced. You just don't see deals that big unless companies are feeling pretty good about the future. So you've got AI booming, the American consumer is strong, big deals are happening. So, why the crash? The answer lies on the other side of the coin. Because while all that good news was making headlines, a much darker story was playing out in the background. We're talking about the great downsizing. And this is what economists call a K-shaped economy. And honestly, it's the perfect way to picture it. Think of the letter K. You've got that top arm shooting straight up. That's your tech sector, your booming companies, everything we just talked about. But then you have that bottom arm, and it's sloping down sharply. That represents a totally different and much tougher reality for a huge chunk of the country. And what does that bottom arm look like in the real world? It looks like this. Over 2 million layoffs by U.S. companies just this year. Let that sink in. This isn't just a little downturn. It is a massive, widespread wave of job cuts. And just to put that number in perspective, we're on pace for the worst year for layoffs since the 2009 financial crisis. So you have this bizarre split screen. Parts of the stock market are hitting all-time highs, while the actual job market for millions is in a state of historic pain. And the confusion was even baked into the official government data. The latest jobs report comes out and says, hey, we added a bunch of jobs, way more than anyone expected. Great, right? Well, at the same time, the unemployment rate actually went up. It's a real head-scratcher that creates a total nightmare for the Federal Reserve, making it impossible for them to know what to do next. So, you've got these two powerful forces pulling the economy in completely opposite directions. And on November 20th, that tension, that strain, it just snapped. So what's the real takeaway here? That crazy reversal wasn't really about the fundamentals. The good news was totally real. The problem was what analysts called the market's psychological fragility. Basically, investors were just jumpy. After such a massive run-up, especially in those AI stocks, everyone was on a hair trigger. And that underlying fear was just strong enough to overwhelm all the good news. And this, right here, is maybe the single most telling chart of the entire year. It is the ultimate contradiction. On one side, you have the Nasdaq. That's your classic risk-on bet. You buy it when you're optimistic about the future. It's up a staggering 56%. On the other side, you have gold, the ultimate risk-off safe haven. You buy it when you're scared, and it's up 52%. Folks, these two things are not supposed to be soaring at the same time. It's like flooring the accelerator and the brake at the exact same moment. A huge sign of deep confusion and anxiety. Right. So a safe haven asset is exactly what it sounds like. It's where you put your money when you think a storm is coming. The fact that gold rallied so hard shows that while a lot of people were chasing the AI boom, an equally large group of people were quietly, building an ark. And you just had all these other things piling onto the anxiety. The Fed was getting mixed signals, so nobody knew what they were going to do with interest rates. Key economic reports were getting delayed, so it felt like everyone was flying blind. And in that kind of environment, what happens? The most speculative stuff, like Bitcoin, gets hammered. It was a classic flight from risk happening in the middle of a so-called boom. So what that one manic day on the market really showed us is that we're living in a fractured economy. It's not one single story anymore. It's a system where incredible wealth and growth are happening in one corner, while the foundation for everyone else is getting weaker. And that leaves us with a really big and frankly unsettling question. How long can these two realities keep pulling apart before the whole thing becomes dangerously unstable?